morning, AM Path Chat covering the FX markets. This is Bob Iacchino along with Mike Arnold from Path Trading Partners. A couple of things that happened last night. We had the Swiss gross domestic product numbers quarter over quarter and year over year. Both were disappointments versus expectations. Quarter over quarter was 0.1, year over year was 0.6. They were expected out at 0.4 and 1.3 respectively. But more important than that, Eurozone CPI, the Eurozone Consumer Price Index, the estimate, year over year came out at 2%. The core year over year came out at 9%. Now came out at 0.9%, so 0.9%. Both of those were as expected, and that 2% number was the highest in 4 years. So that is the highest increase in consumer prices year over year in the Eurozone in 4 years. We've got Canadian gross domestic product coming out today, which is going to matter because when Mike shows you the Canadian dollar chart, they've had a pretty significant 3-day move in the Canadian dollar. Now, in terms of overnight news, Fed Governor Lael Brainerd joined the sort of hawkish team, the we need to hike rates soon team. She made a couple of comments last night. Now, the critical part about this is Stanley Fischer has made these comments, but he's a hawk. Kaplan has made the comments, but he's neutral. Lael Brainerd is considered a dove. She's been very dovish. She made comments about being near full employment, about being near the Fed's inflation expectations, about having stable growth overseas. And she also said that risks are as close to balanced as they've been in quite a while. And she stated that the time to remove accommodation is nearing. I'm paraphrasing, that's not an exact quote. But essentially, she joined the rate hike sooner rather than later group. And that's the first dove to kind of come out so aggressively. So let me turn it over to Mike so he can get to what's going on in the charts as these are live charts, you're saying.
Okay, thank you, Bob. Euro, US dollar. Right now we're trading at yesterday's lows, which is providing some support. And we have this trend line that we can easily get back above. Should we rally higher, I'm watching for a retest of the 105.40 level, followed by right around the 105.50 to 56 area. And then if we continue higher from there, 105.85. On the downside, we have a target level and a significant level at 104.94. And then the target level below that is 104.62. This 104.94 is going to be pretty decent support. It's a significant level. It's also a defining point for a trend line that we're currently just trading below. So watch for those levels. The pound, as we mentioned yesterday, we had a stop reduction down at the 122.81 where we lowered our stop down just above the significant level of 125.26 and also a GAN level. We then pointed out the target at around 122.60 area, which was also another GAN level, which we've hit, and now we're rallying back. Not surprised to see this rally back. Wouldn't even be surprised to see us rally back all the way to the 123.46 level, which is an old or prior defining point in a double GAN cluster level. Above that, we have a declining 8 EMA 123.76, which is going to keep coming down to put downward pressure on this. Should we turn back lower? Next key area down, 122.16 to 122.20 area. And then below that, we have a huge cluster of things, including the full target for the double, all around the 121.51 to 121.67 area. So those are eventual downside targets. Yen, as you can see, we've reversed strongly. We've now hit the next target level that we talked about, 114.28, which is also a GAN level. We're now looking on a continued move higher for 114.76 to 114.95 area, which is right in here. And then above that, we have 115.12 to 115.32, which is this little cluster in here. If we pull back, watch for support from this old trend line on the kiss of trend line goodbye. Then we have all the moving averages rising up. Should we temporarily drift below that, look for support around 113.36. Swissy, Redraw on the lower trend line, which is now not in sync with the channel line, but both will provide eventual support. Pulling back, watch for support around 10063 and this rising channel line, both which are coming in the same area right now. We've already hit our next upside target of 101.17. Beyond that, we have a key defining point at 101.40, and then we have a target area right around the 101.67. So right around the 50 to 67 up in this area, we have another full target area should it continue higher. Aussie, we broke down through both our targets, and now we've hit the next GAN level we've talked about, the 75.95 level, which has also come in with a flat exponential moving average, which is providing resistance. Should we turn around and get some dollar weakness and Aussie strength, watch for a rally back to 76.18 to 20 level. And then if we break through there to 76.38 to 40 level, which is this next level, we're getting also look like we're getting the first cross of the moving average rotation zone lower, which will provide resistance. And we may have a redraw of this declining trend line. It's still not a redraw, but if the price action stays where it is today, it will be a redraw tomorrow. If we do continue to break down further, this is a prior breakdown zone, so this is pretty critical support. But if we do break down further, I'm watching for the next areas around the 75.52 to then 75.22 key areas. Finally, the CAD, which Bob talked about. This has been on a massive run. We're into a day's not over yet, but we've had 4 completed days up, and we're up so far today. We've hit all our key levels. We've gone through this significant level, returned to that GAN level, moved up towards our next target yesterday, which was 133.62. Now we're through that today. Next targets are going to be the 133.87, which is a prior defining point, also coming in line with this declining trend line. 133.99, so the 134 level, that's going to be pretty decent resistance. Should you see a pullback, first going to watch for a retest of 133.62, and then this prior significant level, 133.21, could be pretty significant support. Beyond that, back lower, we have 132.83, and then we'll have the rising 8 coming in. I would not be surprised to at least see some kind of pause or pullback in this move. It's gone awfully far, awfully fast, but we will trade it in the short-term direction it is trading. And as Bob said, key numbers come out in the Canadian dollar today, so it could trigger some kind of move either way, so watch for that. That's all I have for you, Bob. Back to you.
The interesting thing on this dollar Canada chart, Canadian gross domestic product comes out in about 10 minutes from this recording. It's expected at 1.7 year over year and 0.3 month over month. And this kind of a run, weaker Canadian dollar, has a lot to do with the Royal Bank of Canada's comments during the week that they think this actual temporary spike in inflation is just that. It's temporary. They said there's other factors, not really specifically saying what those factors are, but they're saying that this spike in inflation and this spike in GDP could be temporary. So it's an interesting stance, but it kind of tells you that they're pretty set to stand pat. So if that number comes out and surprises quite a bit, you'll at least see profit taking in dollar Canada. If you enjoy these videos, hit the like button, hit the subscribe button, and then hit the little alert bell so that you'll be notified by YouTube when we put out a new video, as these things are time sensitive. Follow us on Twitter, path_trading. Like our Facebook page, which is pathtradingpartners.com. Leave us a comment on this video if you want, or shoot us an email, support@pathtradingpartners.com, if you want us to look at anything specific. Also, check out our podcast, the Money Path Podcast. You can find it by typing in the Money Path in both the iTunes and the Google Play search bars, as well as finding it at pathtradingpartners.com. Cheers, everyone. We'll talk to you soon.